Hi, it's Thursday, March 24th, 2011. It's Ryan Charles. Welcome to the Loan Giants Daily, where today we're talking about 3 different types of mortgage lenders. Okay, so all 3 of these different types accomplish the same goal, getting you money for your house. And there's multiple different designations into these 3 different types of lenders. However, any lender that's out there will fit into one of these 3 boxes. All right, let's start with an easy one to explain. That's lenders. These are the banks that you're thinking about. Bank of America, Wells Fargo, Chase, and Citi are the big 4. And there's many others, but these are depository institutions and they're direct lenders. So these people are lending their own money for loans. Second one I want to talk about is brokers. They're on the opposite side. They're not their own bank. They don't lend their own money. They're basically, think of them as an intermediary that package up the deal and send it to the bank of their choice. It's supposed to be the one with the lowest interest rate to their borrower. That's the name broker, obviously isn't tied to mortgages. You got stockbrokers, anybody who's acting on their behalf. So that's what they're doing in this case, acting on your behalf to get you financing. Last but certainly not least is what we are here at Alcova. That's a correspondent lender. And what that basically means is that the loan closes in the correspondent's name, and they are lining that up to sell to a lender, to a direct lender. So we actually close it and sell it to a lender immediately after. What I like about being a correspondent is, in addition to closing in our name, which provides a level of security to these banks buying the loans because they don't have to buy them from us. It provides flexibility, and what I mean by that is a lot of times we have the ability to broker or to bank the loans. So we act as a lender and a broker at the same time. And depending on our client's needs, sometimes it's better to broker a loan, sometimes it's better to bank the loan. It just provides flexibility, and to me it provides optimal pricing. Those of you who know me for a little while know that I used to be part owner of a brokerage. The reason I made my move is because legislative changes are kind of tightening on the brokers, the small guys, and they don't have a voice like the big banks do. So that's where I moved over to the correspondent. I believe it's here for the long haul. I think you're going to see moving forward that the professionals who stay in the mortgage business, which a lot of people are getting out, are going to land in the correspondent area. These banks are the ones that perhaps don't have the huge names that you've heard of, but they're not brokers. They close in their own name, which means they're well capitalized, and they're going to be here to stay. So which one's right for you? Well, I'm a little biased, so I don't know the right person to answer that question. But I can tell you a little bit about how the business works. Brokers and correspondents are typically going to work a little faster and a little cheaper than the lenders are. And by the lenders, this includes the big banks. Now, the lenders do have something going for them that we can't do, brokers and correspondents, and that is they're going to have a bigger toy box, construction loans and lot loans and things that just we don't have access to anymore because of the state of the market. So keep that in mind as you decide. Price, timing, and product are all going to help make your decision for you. I'd love to be a resource. I'd love to do your loan. Give me a call. I'll point you in the right direction. If I can't do it, I'll get you to a bank that can. Talk to you soon. Thanks for listening. Bye. Coming to you tomorrow with a fun Friday. I got a video that's going to knock your socks off. It's hilarious. Stay tuned. Until then, have a great one.
This is where it's at.